depreciation expense for professional library is right here, $7,200. Depreciation expense for equipment, debit, $13,200. Salaries expense, debit, $50,400. Insurance expense, debit, $2,400. Rent expense was a debit of $36,000. And I get to teaching supplies expense, debit, $5,200. Advertising expense, debit, $6,000. Utilities expense, debit, $6,400. Okay, now that we do this, we have to total up the debit column, total up the credit column, and see if they balance. So let's start. 34,000 plus 7,500 plus 2,800 plus 9,600 plus 35,000 plus 80,000 plus 50,000 plus 7,200 plus 13,200 plus 50,400 plus 2,400 plus 36,000 plus 5,200 plus 6,000 plus 6,400 equals, I get 345,700. So I'll put the total down here, 345,700. Nowadays we have Excel spreadsheets that do this for us automatically, but you're going to have the fun and joy that all of us accountants have learned by doing it by hand. Okay, credit side, 17,200 plus 28,200 plus 26,000 plus 400 plus 7,500 plus 40, 90,000 plus 131,400 plus 45,000, and I get 345,700. And check it out, 345,700. They're equal. So the debit side and the credit side are equal to each other. Yay! Now, what happens if you don't get the same numbers? Well, you don't do the Macaulay Culkin and start waving your arms above your head and going, ah, and acting like an idiot, okay? What you do, make sure that you've added everything up here. Make sure, double check yourself to make sure that you didn't miss something, because, I see this all the time. People add a zero or they take away a zero than what's actually there, and so it throws the entire thing off, okay? So just recalculate it. Make sure that you pay close attention. I ran through it because I've been calculating for umpteen million years with a desk calculator, so it's not a big deal to me, but to you, you probably never calculated one day in your life. I don't know. I had no idea what your experience with calculating is. Either you're very experienced or you're not. And so take the time, make sure that you're doing the numbers right, pay attention to detail, and just do it again. And just make sure that you did add up your columns correctly. And if you did, and you still come up with numbers being wrong, You don't need to do the Macaulay Culkin thing again, okay? Just, take a deep breath, it'll be fine. Just now go backwards. From here, go back to your T accounts and make sure you did debit to debit, debit to debit, debit to debit, and you check your dollar amounts to make sure that you transferred the dollar amounts correctly. I see this happen many times. Students, for some reason, they put the wrong dollar amount. I don't know what happened with that, but they just do. It happens. And if you didn't find anything that came up, then double check your balances. Make sure you added, like prepaid insurance, you had $12,000 debit with a $2,400 credit. Make sure that you took the difference between the two numbers. If you got debit and credit going against each other, that's going to be a subtraction. Make sure you did a subtraction, not addition. Okay? Don't make those kinds of mistakes. Those are pretty sophomore mistakes, but they do happen. Okay, so you have to just double check yourself, make sure you're right. If you don't find anything wrong after that, then you have to take this back to your journal entries and make sure that when you transferred your journal entries, you transferred everything on this page to here. Okay? Now you can see everything that's in red ink is handwritten, comes right off of here. Okay? But it's not going to be that straightforward when you're doing this on the computer. So go back, make sure you caught every single line, every single item has been accounted for, and you moved every single item that was on this page over to here. And you did debit to debit, and you did credit to credit, because there's where your mistakes wind up happening over and over and over. Okay? Just make sure you keep debit to debit and credit to credit straight. If you still haven't done it, if you still don't come out right, then look at your journal entries. Maybe you did something wrong with your journal entries. It does happen. People make real bonehead mistakes doing their journal entries. Okay? Again, don't freak out. If everything winds up coming out and you do wind up bouncing, then you're ready to do your financial statements. And you can literally take everything off of this page and put it directly onto your financial statements. Because check this out. Here's my tuition fees earned, $131,400. There it is on the income statement. Your $45,000 training fees is right here also. There's your total revenues. Okay. Your expenses listed out: professional library depreciation, equipment depreciation, salaries, insurance, rent. I'm just going right down the line, straight down the line, all the way through all of these, and I'm listing my expenses. I put the total over here. Total revenues, total expense, net income, the difference between the two. Then I go to my statement of owner's equity. I start with capital. That would be the beginning capital. You'll notice it's December 31st, 2014, not 2015. This is a year ago. We're looking a year back. Was it 90,000? Well, here's capital at 90,000. This is the 2014 balance of capital, which is your beginning balance. That's what you put in here. Then your net income that you calculated, 49,600. That comes right down and feeds right into my statement of owner's equity as net income. I'm adding net income to this. Then I subtract the withdrawals from the owner, and here's the withdrawals of 50,000, and I am actually going to subtract that from this 139.6 to get 89.6. This is my new capital balance. Okay? Because when I go to my balance sheet, I will go straight down the line. Cash, accounts receivable, teacher supplies, prepaid, insurance, professional library, accumulated depreciation, equipment, accumulated depreciation. These are all item by item the same. Okay? And you'll notice with the library and depreciation, the equipment depreciation, I've indented those numbers. The 35,000 right here and the 17,002 is subtracted. I take the difference and I put the difference out here on the, to the side, on the right. the 80,000 and then 28,002. I subtract and I put the difference out here to the side. Then I total all my assets. Then I go through accounts payable, salary payable, unearned training fees. Those are my liability accounts. And those show up right here. Accounts payable, salaries payable, unearned training fees. They're right here. Total up, total liabilities. Then I have my equity section. And this 89,600, where did that come from? Well, this right here. This is what I calculated. This is my new capital balance, and so I put my new capital balance in here in the equity section on the balance sheet. Okay? Total up my liabilities, total up my equity. I get 123,500. 123,500. These are the same dollar amounts. Thus the name balance sheet, because I get my assets to balance with my liabilities and equity. And what does this also satisfy? Assets equals liabilities plus equity. There's my equation, my accounting equation. Assets equals liabilities plus equity. And there it is. Assets is equal to liabilities plus equity. And I proved it right here between these two numbers right here. My equation fits. If you get to this point and your balance sheet fits and it balances, then you're done. Yay! You guys have a good one. We'll see you later.